Today we'll be talking about tax law changes that take effect beginning with the 2014 income tax return season. Please note the forms that we're going to use today are not in their final format, and they won't be in their final format until October 1st. And this is especially important for the M1M and the M1 read. We'll first talk about changes relating to income tax additions and subtractions reported on the Schedule M1M. So to get to the forms today, we are going to access them by clicking on the software vendor link, and that's under the tax professional bucket. And then the forms, specs, and schemas, and then individual income tax. Now you will notice here as we look at the title of the form, you'll see Form M1M, and then you'll see a date, and it says near final, and the date is September 10th, 2014. Again, I want to reiterate that these are not final forms, but we want to at least make them available to you with the script after the conference call so that you can begin to become familiar with them. When they are final forms, they will be posted under the forms section of our website as well for you to reference. For software vendors, the status will change from near final to final. So let's talk a little bit about the standard deduction for married taxpayers. Married couples are no longer required to add back part of their standard deduction. For tax years 2011, 2012, and 2013, this addition was entered on Schedule M1M, line number 1. We talk a little bit about the military subtraction. The subtraction allowed to members of the Minnesota National Guard or other reserve components of the United States military for active service was expanded to include income earned under Title 32, Active Guard Reserve Status. And this subtraction will be reported on line 26 of the 2014 Schedule M1M. So we'll talk a little bit about mass transit benefits and some changes there. There is a new subtraction for employer-provided mass transit benefits that are included in federal taxable income. The subtraction covers employer-provided transportation in a qualified commuter highway vehicle and transit passes in excess of the federal monthly threshold of $130 for 2014. So just to note, a qualified commuter highway vehicle is a vehicle that can seat at least 6 adults, not including the driver, and for which 80% of the use can reasonably be expected to be for purposes transporting employees between their homes and place of employment, and during which the number of employees transported will be at least half of the adult seating capacity, not including the driver. Transit passes are any pass, token, or similar item that entitles a person to transportation or transportation at a reduced price if that transportation is on mass transit facilities or provided by someone in the business of providing transportation in a vehicle with a seating capacity of at least 6 adults. And again, that's not including the driver. So for 2014, the subtraction for each month is limited to the lesser of $120 or benefits received in excess of $130. So to show how this subtraction is computed, let's take a look at a couple of examples. So on your desktop, you should see a PowerPoint slide. So for example number 1, Jane's employer provides her transit passes valued at $200 per month during the months of January through June. Starting in July, the value of these passes rose to $260 per month. For the months January through June, Jane's monthly subtraction is $70. For the months July through December, Jane's monthly subtraction is $120. So Jane's total subtraction for the year would be $1,140, as noted on the screen in front of you. Example 2, in each month of 2014, John's employer provides him with transit passes valued at $130. Because the value does not exceed 130 in any month, John would not be allowed a subtraction. This subtraction is allowed in computing alternative minimum tax income. And again, after this conference call, we'll have the script available, and we'll also have examples available for you on these. So for Minnesota tax purposes, this subtraction provides permanent parity of the income exclusion thresholds for employer-provided parking benefits and transit benefits, and only applies if federal law allows a higher exclusion for employer-provided parking benefits than for transit benefits. This subtraction will be reported on line 36 of the 2014 Schedule M1M and line 18 of the 2014 Schedule M1MT. So now we're going to talk a little bit about the federal itemized deduction phase out. There is a new subtraction for taxpayers whose federal itemized deductions are phased out to below their standard deduction. The subtraction will be the smaller of the difference between their limited federal itemized deductions and their allowable standard deduction, or the difference between their limited and unlimited federal itemized deductions. Taxpayers who are subject to the federal itemized deduction limitation, but whose federal limited itemized deductions are more than their allowable standard deductions, are not allowed this subtraction. The worksheet for Minnesota itemized deduction limitation addition will account for the federal limitation. And this subtraction will be reported on line 37 of the 2014 Schedule M1M. So that completes our discussion of the additions and subtractions. We'll now discuss income tax credits, starting with the brand new reading credit. So Anna's going to pull up the M1 read, and that should be on the screen in front of you. The reading credit is a 2014 law created a refundable credit for tax year 2014 only. The reading credit will be calculated on Schedule M1 Read. Unlike the K through 12 education credit, the reading credit does not have an income limit. The credit is equal to the lesser of $2,000 or 75% of expenses paid for the qualifying instruction or qualifying treatment of a taxpayer's qualifying child or children. The maximum credit of $2,000 applies regardless of how many qualifying children the taxpayer has. So let's talk a little bit about some of the definitions for the reading credit. A qualifying child for this credit, a qualifying child is a child who meets the definition of a qualifying child for the Minnesota K through 12 education credit, has been evaluated by a school district for, but found not to have, a specific learning disability, and was found as part of the school district's evaluation to have a deficiency in basic reading skills, comprehension, or fluency that impairs him or her to meet expected age or grade level standards. It is important to note that while a qualifying child for the reading credit is always a qualifying child for the K through 12 education credit, the converse is not always true because of the evaluation requirement necessary to be eligible for the reading credit. So let's talk about the definition of qualifying expenses. Expenses that qualify for the credit are paid for qualifying tutoring, instruction, or treatment, not compensated by insurance or pre-tax accounts, actual expenses for which the taxpayer can document, and are not used to claim the K through 12 education subtraction or credit. Taxpayers may not use expenses used to claim the reading credit to claim the K through 12 education subtraction. So we'll talk a little bit about the definition of qualifying instruction or tutoring. To qualify for the credit, instruction or tutoring must help the qualifying child meet state academic standards in subjects such as language arts, math, science, social studies, history, geography, economics, and government. So now that we've talked a little bit about the qualifying instruction for the tutoring, let's talk about the qualifying treatment. To qualify for the credit, the treatment must use recognized diagnostic assessments to determine what intervention would be most appropriate for the child, and employ a research-based method to teach language decoding skills in a systematic manner. Taxpayers who are unsure whether or not the treatment their child is receiving qualifies for this credit should contact the treatment provider, and they should be able to identify based on those definitions. A qualifying instructor is someone who is not a lineal ancestor or sibling of the qualifying child and who has a valid teaching license for the grade level and subject taught, or is supervised by somebody in this category. They have successfully completed a teacher competency evaluation. They provide instruction at an accredited school or has a bachelor's degree. So Schedule M1 Read, that's in front of you, will flow on to line 27 of Form M1. So now we're going to bring up Form M1C. So to make room for this credit on Form M1, the total of credits for taxes paid to another state was moved to line 7 of the M1C, which is the other non-refundable credits. Taxpayers must still file a separate Schedule M1CR for each state to which they paid taxes. We will now move on from the newest income tax credit to one of the oldest, which is the dependent care credit. So we'll bring up the Schedule M1CD, which is the Child and Dependent Care Credit. For the dependent care credit, the Minnesota credit is generally the lesser of the federal credit, or $720, which phases out based on income. For one qualifying child, or $1,440, which also phases out based on income, for two or more qualifying children. For tax year 2013, the federal credit amount for Minnesota purposes was computed based on the rules of 2001, which limited qualifying expenses to $2,400 for one qualifying child and $4,800 for two or more qualifying children. The percentage of qualifying expenses allowed as the credit was also limited to the maximum of 30%. As part of the federal update legislation, the federal credit computation that Minnesota uses was updated to the current federal credit. This means the credit is calculated with qualifying expenses of up to $3,000 for one qualifying child and $6,000 for two or more qualifying children. The percentage of qualifying expenses allowed as the credit was also increased to a maximum of 35%. So that completes our discussion of the individual credits. We'll now discuss a couple of refundable business credits. So we're going to go to the M1B form, which is the Business and Investment Credit, and talk a little bit about Greater Minnesota Internship Credit. The 2013 Minnesota legislature created the Greater Minnesota Internship Credit, which is available to employers beginning with tax year 2014. The credit is equal to the lesser of 40% of the compensation paid to an eligible student for work for which he or she can receive academic credit, the amount of credit certified to the taxpayer by the institution out of the institution's credit allocation for the year. For this credit, an eligible student is a student who is enrolled in a Minnesota public post-secondary institution or Minnesota private nonprofit bachelorette or graduate degree granting college or university and has completed 1/2 of the credits needed for their degree or certificate. To claim this refundable credit, employers must be certified by the academic institution the student is enrolled in. The certification must provide the amount of credit the employer is eligible for. And this credit will be reported on line 4 of the 2014 Schedule M1B. So let's talk a little bit about the Angel Investment Credit. The amount appropriated for this credit was increased from $12 million to $15 million for tax year 2014. The program was also extended through tax year 2016 with an annual appropriation of $15 million. Beginning with tax year 2015, $7.5 million of the appropriation must be allocated to investors in qualifying businesses that are minority-owned, women-owned, or operating in Greater Minnesota. To claim this credit, investors must be certified by the Minnesota Department of Employment and Economic Development. So that completes our discussion of the income tax credit changes that take effect beginning with tax year 2014. Now let's discuss a couple property tax provisions that will affect 2014 income tax returns. So on your screen, you'll see the homepage of our website. If you click on the orange tax law change button, you'll come to the site, which also has information on all the tax law changes. I want to talk briefly about the homestead credit refund. Homeowners' homestead credit refunds based on property taxes payable in 2014 were increased by 3%. This means taxpayers who qualified for the credit will receive a 3% larger refund than they would have under the prior law. For homestead credit refunds based on taxes payable in 2014 and received in 2014, homeowners must reduce their 2014 real estate tax deduction by the credit that they receive. Previous legislation required the department to send notifications to taxpayers who may qualify for a homestead credit refund based on property taxes payable in 2014. Homeowners who filed for the credit based on taxes payable in 2013 or had already filed for the credit based on taxes payable in 2014 were not sent a letter. The letter was only sent to homeowners for whom the department estimated a refund based on property taxes payable in 2014 of $1,000 or more. So you may receive some inquiries this year based on taxpayers receiving that letter, and the letters were all sent, I believe, the week of August 20th. Now let's turn our attention to the tax law change page and the supplemental agricultural credit information and the supplement agricultural credit for taxes payable in 2014. So again, under the new tax law changes page, there is a farmer's icon. If you click on that, you'll see the 2014 supplemental agricultural credit overview. Qualifying agricultural homesteads were allowed a supplemental credit equal to the lesser of $205 or the net property taxes payable on the property, excluding the taxes attributable to the house, garage, and surrounding 1 acre of land. These credits will be issued in October to qualifying the qualifying taxpayers do not need to do anything to receive that credit. Again, we'll issue those credits in October, and qualifying taxpayers do not need to do anything to receive the credit. Taxpayers who receive this credit must reduce their federal real estate tax deduction by the amount of the credit they receive. And if you have questions on the credit, you should contact the county. So you'll notice on our website there is a 2014 Ag Overview. There is a list there that shows all the, and then Director of directory of county auditors. And that list shows all the auditors and their contact information. So the Department of Revenue is simply issuing the checks. Any questions related to the program would be directed to the county auditors that are on that list. I also want to bring your attention to a few changes with electronic filing. We've received feedback on some of the warning messages that we issue, and as a result of that feedback, we have inactivated 5 of our warnings on business returns, and 2 warnings have been converted into error rejection codes. So you will see a couple of new error rejection codes that, again, were transitioned from warnings into error rejection codes. One of those is error rejection code 0683, which simply states that the Minnesota tax ID must be registered under the correct federal employer identification number. And then to change or correct your tax type, please call business registration, and it lists the business registration telephone number. We've also implemented error rejection code 0266, which is Minnesota tax ID is required and must match the Department of Revenue records. We've also made some changes this year as to how error rejection codes will be presented. So for 2014, you'll receive a 4-digit code beginning with a 0. So it may be, for example, 0006. And for errors in your acknowledgments instead of text. So this changes for all tax types, and so you'll be able to look up the error codes on our website. So if you go to, again, the software vendor link, which is under the, do you want to go back? So the tax professional bucket and the rejection error codes. And then you'll be able to open those Excel documents and have a listing of all the error codes that you need for the particular tax type, whether it be individual, property, fiduciary. We also have some changes coming to the payment voucher and our payment information on our website. We've heard your feedback, and coming early in 2015, we are simplifying how we communicate payment information. You will see payment information on our homepage more organized and a clear list of the payment options that will be available to you. For those of you that wish to still pay by check, we are replacing all 60 payment coupons or vouchers that accompany checks with an online wizard. So instead of figuring out which voucher to use or searching for the right one on our website, users will answer a few simple questions, complete a few fields, and a voucher will be generated for you to print and mail with the check. We will be conducting usability testing on the wizard, so watch our email notifications. If you're interested in being a tester, we'll send out an email notification looking for testers. And then once we finalize that and it's available for use, we will be providing more information on the voucher, and then also how to make payments electronically if you wish to do that as well. So just as a reminder, again, for the software vendors, as a result of the wizard, the vouchers themselves have changed from previous years, and the new specs are available on the software vendor page. So again, clicking the software vendor, and then under the form specs and schema, you'll see the voucher specifications. And then again, depending upon which voucher you're looking to program, they're available for you. And you'll notice under the description column, it does say that those are final. So again, those are final forms. And I know we've talked about the paper vouchers, but we do also want to make you aware that your individual taxpayers can always electronically pay, even if they're making estimated payments. They can schedule all at one time with the dates they would like them withdrawn. So again, if you're working with your tax payers and they need to make 4 estimated payments or whatever the case might be, you can schedule those to come out at the time that's specified by the individual taxpayer. Your taxpayers can do that as well. And when we have that voucher available to you, we'll also provide some training on how to make electronic payments. I do want to talk a little bit about debit cards as well. I know that we told you we would be transitioning to debit cards for this filing season. However, we have made some changes to that. As you know, we take the privacy and security of taxpayer data very seriously, and for this reason, we are going to continue to explore a refund solution that could include debit cards that meets the needs of taxpayers and our security expectations and requirements. So with that being said, we will not be rolling out a debit card solution for 2015 filing season. As we continue to explore different options, we will be sure to update you with what that solution may be. But again, we really want to make sure that we're choosing a solution that provides the security that taxpayers need. I also want to recognize and thank you for the work that you did with us on partnering on direct deposit last year. We do still believe that direct deposit is the safest and most convenient way to get refunds, and we reached a 10% increase in direct deposit last year with your help, and we're asking for you to make sure taxpayers are aware of this option again this year. If you're a software vendor on the call, we want to remind you of a few things we've covered at previous software vendor conference calls. We do encourage you to provide a link to your users that takes them to the error rejection codes. If you don't provide a link, you will need to incorporate our error rejection codes into your software. If you're wanting to file electronically with Minnesota, the deadline for registering to electronically file is October 30th. And you'll find the registration on our website, again under the software vendor link and the registration and standards tabs. You'll want to make sure that you take a look at the standards and then complete the form, fully complete the form. If your company participates in the free file program, your letter of intent is due to us by November 1st, 2014. And we did send a letter notifying all software vendors of this information. If for some reason you did not receive the letter, you can contact us at the eFile Dev Support at state.mn.us or by telephone, which is 651-556-4818, option 2. And I do want to note on the right-hand side of that page there, you see our contact information and the ability to email us is there. You'll also notice under the FAQ that there are key dates that you should be aware of. If you click on that, you will see the key dates that are important to you as software developers. We also want to make sure that you're aware that fiduciary returns will be MEF in 2014. 2014 returns sent in the legacy format will be rejected. So again, fiduciary returns will be MEF in 2014. And finally, in closing, before we open it up for questions, I just want to remind everybody as to how you can stay connected. We do have information available under our website under that tax law change icon. You can also stay informed by signing up for our email alerts. So if you're at our homepage, there's that red envelope in the lower right-hand corner. If you click on that, you'll enter your email address and you'll be able to select the different email notification lists that you would like to receive information on. And just as a reminder, there is one there to give us your feedback so that if you're interested in usability testing, that's where we would send notifications looking for testers.